It's another trading weekend, and very quickly, I'm going to be going through some Deriv synthetic indices. So, for those of us that trade these assets, I believe this video will be of very immense use to you. So, without wasting much time, I'm going to try as much as possible to go through a few like the crash and boom index as well as the step index. So, I'm starting off with crash 900 index. The reason I'm starting up with this is because I just gave a signal on the Telegram channel, and I will be hoping that a lot of people get to see this. For those that are not on the channel, get to see this and benefit from it as well. So I'm currently on the monthly time frame, and on this time frame, we basically try to get key zones and directional bias. But because this index has not been trading for a long time, you can see that we have sort of limited data. How do I mean? We can see clearly that this index, crash 900 index, has been an uptrend. And what do I mean? You can see this that it started out here, price gave us a low, and then a higher high, and or rather a low and then a high. So we had supposed to have like a higher low and then a higher high, but the market went into a range. Now, how do I mean? You can see the top half of the chart where price was rejected for months, where for the first month price got here, it was rejected. It failed to get back there in the next 1, 2, 3, 4 months. In the fourth month, price got there, was rejected. Fifth, sixth month. So we have like 1, 2, 3, 4 major rejections from this area, and this rejection came all the way down only as far as this level. So what do I mean? For 1, 2, 3, and most recently the fourth month, price has also been rejected here. So when we have price moving between resistance and a support zone, we refer to that price as what? A ranging market. Now, irrespective of price ranging, it doesn't mean that, or rather, the fact that price is ranging doesn't mean that we can't still look for opportunities to trade it, because the simple rule of a ranging market is that we buy from the support and sell from the resistance. And another encouraging thing that will make me say that the directional bias is still bullish is because we are currently at the support level of the range, and then we have this rejection candle. So I can't zoom in more than this, but I'm sure you can clearly see this rejection candle. This is an indication of bias. This week we are seeing is an indication of the strength of bias pushing the price upward. So where do I think price will be heading to? All things being equal, price is likely head back to this level. And in this range, because the market is originally bullish, I'll be more comfortable buying in the range than selling in this kind of range. So our directional bias is bullish, and we can see our relevant key zone. So the beauty of this is if you're able to catch this trade like I just did, and you have strong psych game, then you can really take big advantage of this. So the next thing would be to go to the weekly time frame. Now on the weekly time frame, the range looks clearer, and now we're seeing the presence of buyers clearer as well. So what can we make of this? There's really not much information to take from here other than the fact that yes, our initial take from the monthly time frame is correct. So just looking at this, like where we get to take like a structure of the market, yada, and we can't really do that here because it's straightforward with what we're seeing on the from the monthly time frame. So we'll quickly go to the daily time frame. So this is where it gets really interesting. So on the daily time frame, we can see a strong bullish reversal chart pattern. What does that mean? It means that when this pattern appears, when price of the market is going downwards, in other words, when it is making lower lows and lower highs, and then this pattern appears at a key zone, emphasis on key zone, then there is a strong probability that price wants to reverse and start going upwards. And if I were to zoom in for us to see what I'm talking about what double bottom. So a double bottom is a strong bullish reversal chart pattern, and if I were to go to the line graph, you can see it clearly. However, one thing, although I've given this trade already on the Telegram channel, this bottom is not clearly formed yet, but I'll be telling us why I gave the trade as well. So to trade the double bottom, it's simple. So now we have what we call the two portions that makes the bottom, and then we have the neckline. So this area here is what we refer to as what the neckline. And the original way to trade this would be to wait for price to break above this neckline, come back to retest this, and then we can take our trade upward. So somebody would now say, if this hasn't played out yet, why did you give trade signal for people to buy this? So like I said, I'm going to be showing us why I did that. So the next thing, now that we've seen that our directional bias is bullish, and we're seeing a strong bullish reversal chart pattern on the daily time frame, we can go to one of our entry time frame, which is the H4 time frame. So let me take some of these guys out to make it right. So I can take this upwards for us to see the neckline of the bottom. So you can see the double bottom. It is not guesswork. You can see the left part of the bottom, the right part. This is the neckline, and price is yet, like I said, to take out the neckline. But the reason I gave the signal to buy is that if I zoom in, you can see that we have what we call what the right part of the bottom just formed an inverse head and shoulder pattern. So if you've not seen it, let me mark it out for us to see. So this would be the neckline of the head and shoulder pattern, and this would be the left shoulder, the right shoulder, like I said earlier, the neckline. So, and the simple rule, and of course, I can come here and take this as what the head. So the simple rule for trading inverse head and shoulder pattern is that when price takes out this neckline, we wait for a retest of the neckline, and then we can start what buying. So long as price doesn't come to take out this right shoulder, then the setup remains really valid. So now you can see clearly why I give the buy signal with our stop loss just underneath this right shoulder. So, and our first take profits would be here. So if I can get an aggressive movement towards this level, because remember, the neckline from the double bottom is not yet taken out. So the double bottom setup, I did not give the signal based on the double bottom chart pattern that we saw, but I gave it based on this inverse head and shoulder pattern. So I'm hoping that price would get back here. So my take profit is actually around this area. So if price is able to, when price gets here, I'm going to take some profit, and then if it's able to go past it with a strong momentum, then I'll be ready to ride it all the way up, and then that means then I'll be taking advantage of this what inverse head and show of the double bottom that we saw from the daily time frame. So to make it even more clear, to make it even clearer rather, you can go to the 1 hour time frame, and then now you can see the left shoulder, the right shoulder, the head, the neckline. Price blew above the neckline, came back to retest it, and then now we have buyers pushing price upward. So without wasting much time, this is what I see on the crash 900 index. So if you're lucky enough to see this, I'll be posting this video immediately. If you're lucky enough to see this and price is still playing around this neckline, we might have like a spike downward. So if price is still playing around this level and doesn't take us out or hasn't taken us out, then you can still jump into this trade with your stop loss here and take profit at this level. So the next index I'll be looking at would be okay, let's look at boom 1000 index. So boom 1000 index, a I took a very long sell position that that lasted for 3 days and made good amount of profit from it. And I shared the results on my socials. So I'm just gonna take us, and somebody sent me a message to actually do an analysis on the particular results that I shared. So I'm just gonna go through this also as well. Okay, for Boom 1000, we can see also from the monthly time frame that the market's original structure of the market was a high, higher low, higher high. Market came back to give us a double bottom or equal lows, and then there was an aggressive push for months upwards. And this aggressive push got to this level and price started retracing downwards. Now, this is quite interesting because it is very clear for us to see that Boom 1000 index is in a downtrend. So it's trending downwards. But the reason I got out of the trade yesterday was not because was because of few things. First, on the monthly time frame, the price is currently at a strong support level. So what do I mean? Let's zoom in. You can see that this acted as a strong resistance level in the past for months until price was able to break above it, and then price has just retraced back into the level. And it wouldn't make sense to keep selling when price is at what support level. So I had to get out of this trade because I'm expecting buyers to react here and probably push price upwards, if not to try to give us a new high, but probably get to this trend line before deciding if to continue downwards. Now, that was one reason. Another reason is that if I add my Fibonacci retracement to from those swing low all the way to the swing high, then you can see that price is currently playing within the Fibonacci retracement to golden zone. So if I'm to extend this, and that's the zone between the 50% and 61.8% mark. So I had to get out of this trade. But even from what I'm seeing now, sellers are still in control even at that zone. But if there's one thing that we can also notice is that you can see that the momentum is gradually reducing. This big red candle shows big selling momentum, but with what we're seeing now, the selling momentum is gradually reducing. So if I wait and I see that in the coming days that price is able to sellers are able to hold their own and go beneath this key zone, then I can start thinking of selling. So for now, though directional bias is bearish, but it is at a strong support level. So what do we do next? Because like I said, I'm going through this just to show why I sold this particular index, and I'll be showing us where I got into the trade from. So on the you can then we go to the weekly time frame. So on the weekly time frame, the selling momentum becomes, or rather the selling structure, the bearish structure becomes a bit clearer. So let me take this out. So like I said, price is currently at what key support level. So if price is able to clearly clear out this level, then we can start looking for more selling opportunities. So we have price giving us lower lows and lower highs. So if I zoom in and I try to, in fact, I think in the past week, few weeks back, price gave us like a good bullish engulfing candlestick pattern here, only for it to end up forming what an evening star, which is a combination of one, two, three, and then price has been playing around this level for quite a while now. So the selling opportunity I included an internal trend line. I wasn't able to get a clear, okay, I was able to get a clear structure. That was this M pattern here. So I did this, and price came back into this level, and that was where I took my selling opportunity from. So let's look at this on the daily time frame. So yeah, so price came, gave us double top and gave us a structure here. This was where I found my trade. So if we go to the H4 time frame, you can see that price came into this. So I waited for price to come into this level to make another touch of this trend line. So ended up having multiple touches of the trend line. So when price came into this level, I waited to see if there would be anything for me to get as a confirmation before entering the trade. So fortunately, price gave us what? Double top. So like the opposite of a double bottom. So we have the left part, the left top, the right top, and then the neckline. So I actually got into this trade here when the neckline was completely taken out and retested. So I was able to hold the trade all the way from here down to this level. So like I said, I'm going through this not because I saw an opportunity, but just to fulfill the request of someone who wanted to know how I got into the trade when I shared it on my socials. So I entered with this entry confirmation of a double top as well as a counter trend line break. So price took out this trend line. There was retracement upwards, but it was mainly because of this double top. Let me make the top clearer. The neckline of the top. So once this was taken out, so I had to wait for a retracement, like a retest of this neckline, and then I got in. So you can see this is the 4 hour time frame, and I was able to hold on to the trade. So like I said, I still would have been able to. My initial take profit was here, but because of what I saw on the monthly time frame, I had to get out of the trade because I didn't want to get into a nasty pullback that might want to come back to touch this trend line. So that would have meant losing almost everything that I had gotten from the trade. So that's that for the boom 1000 index. So just for context, if price continues going downwards and it's able to, let's go back to the daily time or the weekly time frame. So if price is able to clear off this area and there's a good pullback, then I can start looking for more selling opportunities. So the next would be the step index. So this is a quite interesting index. So let's go to the monthly time frame. So let me take out these guys. So the step index has been in a perennial downtrend. So what that means is that for a very long time, it has been trending downwards, and that's very clear for us to see from those monthly time frame. You can see a lower low, lower high, lower low, lower high, lower low, lower high, a lower low, and the market is trying currently to push upwards. Now, remember, the best place to sell any particular asset is at the most recent lower high. So the market is still on the verge of giving us what? A new lower high. So if we go to the line graph, we can see the movement much clearer. So do I think the market has retraced enough now for me to start selling? I don't think so. So if you ask me, I believe that step index is in a strong downtrend, but is currently making a retracement upwards. So whilst I can place this here to show us the trend of the market, I can also use a fib tool to try to guess where the market would retrace enough to for me to say, okay, I want to start selling this particular market. Remember on the monthly time frame, so like you already know, what we basically try to do here is to get a directional bias and the most relevant key zone. So in this case, My most relevant key zone would be this area. And why this area? Again, because of rejection. So let's zoom in a bit. You can see a lot of rejection. This is a monthly time frame. One candle takes 31 days to form because step index trades 24 hours, 7 days, unlike the forex market. So that means on weekends you can keep trading this particular index. So you can see for 1, 2, 3, 4, 5, 6, 7, 8, almost a year, this level resisted price from moving upwards. So price finally broke beneath it, gave us a new low, and for months, you can see also that the retracement, the momentum of the retracement is weak sort of. So that's why I can take it that okay, this is a retracement. But however weak it is, I will start taking selling seriously again if price is able to get into this area, except something drastic happens for me to change my mind. So my directional bias as of now would be for price to come into this fib golden zone, 61.8% and 50%. Make and in the process probably make another touch of this strong trend line. Then it will make a lot of sense for me to start with selling again. So this is my initial take for step index. So to confirm what we've seen, let's take out some of those things. So I'll keep the zone in mind to guide us, and then we'll go to the what? The weekly time frame. So on the weekly time frame, we can see also that. So let me refine this a bit. So on the weekly time frame, we can see that price hasn't gotten to this level. But however, because we talked about price retracing, so if we say price is retracing, so that means it has to be heading upwards. If I place a trend line here, so we can see that this downward trend line has been taken out and price closing just above it, but we do not need it. So let's not make the chart dirty. But we have a trend guiding this retracement upwards. So what do I mean? Market has given us a high, came back to give us, came back to the same low. But if we go to the line graph, we can see that we have like a W pattern guiding this retracement. Remember, we said that price is coming to this level, and that we'll start thinking of long-term sell when price gets here. So from what the daily time frame is showing us, it's showing us that yes, there was a double bottom here, trying to guide price back upwards. So if we come back to the line graph, we can try to go to the daily time frame to see this structure of the market, this bullish structure of the market guiding this retracement to see it clearer. So on the daily time frame, what do we have? So we have a clearer structure. So on the daily time frame, we can now see the higher highs and higher lows. Now, this is why I want us to pay attention. The market gave us a high, higher low, tried to give us a new high, couldn't really, played here a bit, came back down to give us equal highs and equal lows. So this was a range until the market finally broke out of the range. So we had 1, 2, 3, 4 for the range. Then the market broke out of the range. So this became what? Our new what? High. Our new higher low. From here, the market gave us what? A higher high. Now, forming this higher high, it came back to give us equal low, and then price came back here again to give us what? Equal high. So when we have equal highs and equal lows, that's also what? A range. So if I'm to extend this forward, then I can also extend this as well. So price left here, came back here to give us, we have equal lows, equal highs. So now price is coming back down to make another touch of this trend line probably. And by so doing, now have what? The market trending downwards. So let me zoom in. So this is what we have. Market in trying to go upwards has gotten into another range. Give us a high, equal lows, equal highs. And even though it gave us a higher low initially, this couldn't be qualified as a valid higher low because it failed to break above that level to give us a new high to continue upwards. Instead, it ended up giving us a lower high and price broke beneath the most recent supposed higher low here. And then this is currently where we have price playing around. So if I'm to take this out, I can take this out as well for us to focus on what price is doing currently. So if I'm to zoom in, then we can go to the H4 time frame. So this is where it becomes really interesting, where we can get our opportunity. So I can place this here and say this is our trend. Remember, we're looking at what the range that we saw from the daily time frame. Or let me just put that back in between this level and this level. So if I'm to zoom in for us to look for opportunity, you can see that this is what a good selling opportunity. So another thing that can guide us would be this aggressive movement downwards. So if we look at this from this swing low down to this from this swing high down to this swing low, and then we have like a pushback. Price just came back into our what Fibonacci retracement to golden zone. So if we had caught this early, we should have been in this trade by now. But does this mean that it is too late to still get an opportunity? I don't think so. So let me zoom in properly for us to see. So there would have been a counter trend line here for us to enter this trade. And then would have been in it. So if I were even going to use like the line chart, so with the aid of a counter trend, I would have been in this trade, but just for us to see if we can still get opportunities to enter. Price is already coming downwards. I would have probably gotten into this here. So if we come to the H1 time frame, so like I said, with the help of a counter trend line, this would have been our entry point. Stop loss, our stop loss would have been just above this 61.8% mark, and our take profits would have been here. So we've just missed out on this particular trade. Our stop loss would have been here, and our take profit would have been all the way down to this trend line, either here or all the way down to this trend line. So the only way we get to still participate in this trade, if you come across this video, would be here. If price is able to give us a reasonable pullback, and then we can take advantage of it and continue selling downwards. I know this explanation for this particular index is a bit long, but it is what it is. And you can always compare this with your own analysis. So finally, before we run out of time, let's look at step index 200. Okay. We'll go to the monthly time frame. Let me take out every other thing here. So let's quickly do this. So for step index 200, this you can see the chart. Unlike others that we've been seeing fine prints, this is kind of choppy. So, but even in the choppiness, we can see that we had an M chart pattern, and just like I'd always try to inform us, this is the neckline of the M. Price came back to retest it, and it is currently coming downward. So what does that do what does this information do for me? It simply means that even though the market is choppy, but the seller is still what a seller's market. In other words, sellers are in control of this particular market. So going back to the candlestick chart, let me take this out. And then we'll go to the weekly time frame. So I'm going to try to be very fast with this. So on the weekly time frame, the market is still very choppy. So when I say choppy, it means when you're looking at the chart, we can't even classify this as a good ranging market. So on the weekly time frame, we really can't see much other than the fact that market has been making lower lows and lower highs. Currently, the price tried to do this by giving us a new high. What do I mean? If I were to place a trend line here, an internal trend line here. So, okay. So price gave us new high, came back down to retest this, tried to retest the trend line, tried to pull up, and then ended up giving us what? Like, ended up breaking beneath the higher low. So what do I mean? This was supposed to be like a higher high. So this would have been a higher low, and then was supposed to continue upwards. So would have had a high, higher low, higher high, higher low, higher high. But instead, price ended up breaking beneath, and instead of us having a higher high, we now ended up having a lower high, a lower low, and then with this rejection we're seeing here now. So that means price is trying to push upwards. So the question is, will this upward push go all the way up to give us a new high? We can't tell, but what we can do would be to go to the daily time frame. So on the daily time frame, the downward trend becomes much clearer. And what I was trying to explain on the weekly time frame was that price was coming downwards here, giving us lower lows and lower highs. It got to this level, gave us a lower high. Instead of giving a lower low, it gave us a higher low and pushed upwards to give us a new high. So this was the high I was referring to on the weekly time frame. So it gave us a new high, a higher low. This was supposed to be a valid higher low if it had ended up giving us what? A new higher high. But this movement failed, and the failure of it led to the formation of what? A lower high instead of a higher high. So we had a lower high. This is a valid lower high because price ended up giving us what? A new low. So the structure of the market changed right here. So now we now have a low, a lower high, lower low. And once that happens, our focus would now shift towards selling. And just like we had from the weekly time frame, we can as well decide to place a counter trend line here. So that means we're supposed to have the market going upwards. It failed and broke beneath this trend line that was guiding it upwards. Then we now have what? A higher low. So we can now as well take fib 2 for this aggressive movement and place it here. So this was the last swing from the swing high to the swing low. And then we can now focus on our what? Downtrending market to look for selling opportunities. So now having this in mind, again, we mark out the most important zone in the fib 2, which is the area between this 61.8 and 50%. So you can see that this is really a beautiful and valid setup. What do I mean? Price is currently close to the Fibonacci retracement 2 golden zone. And we can see that this was buyers pushing price upwards. The buying momentum is gradually what? Reducing. We have a dodgy candle here. We're gradually seeing the presence of what? Sellers. So the question would now be, how do you take advantage of this beautiful setup? All you need to do would be to wait for more presence of what? Sellers before you start what? Looking for selling opportunities. So what I would do would be to see how price play within this area. Price might even end up coming to make another touch of this trend line. And then you look for your entry criteria and you sell all the way down for price to give us what? A lower low. So let's go to the 4-hour time frame and see. So you can see that what I just said is already plain. Now this is a good downtrend. Price gave us a low, the retracement. Currently very close to our key zone. So like I said, price might keep playing here. You can see that the buy momentum has really reduced. Sellers are trying to come into the market. And like I said, price, this play here might continue. Now, let me show us something. You can see that this is now like a range on the 4-hour time frame. So this level might be used as liquidity for those that would enter the market too early to sell, and price might just come here, enter the zone properly, make another touch of this trend line, and a lot of people have their stop losses above this meaning play here, and then price would what come downwards. So this is my take on this particular indices. If you're into the trading of Deriv synthetic indices, you can always compare this with your analysis this weekend and try to take advantage of whichever one plays out or aligns with your own analysis or understanding of the market. This is Oba FX Trading Academy. If you want to learn how to do this, whether it's Forex, whether it's cryptocurrency, or when I say forex, I mean even if you trade currency pair or the synthetic indices like I just analyzed now, you can always reach out to us to learn how to do this on your own so that you stop relying on signals from anybody as you become an independent trader. Because I believe that that's the goal of every trader, to be able to sit in the comfort of your own zone or home and make money without disturbing anybody. So thanks for stopping by my channel, and thanks for always supporting the channel. Don't forget to like, share, and subscribe, especially if you've gotten a thing or two from this analysis. Enjoy the rest of your trading weekend and cheers.